global markets have been extremely supportive in spite of all the geopolitical tensions which we have been seeing around us. US corporate results, particularly some of the stellar IT technology numbers which have come out, including NVIDIA, have enthused the market. In spite of geopolitical tensions, oil prices have started coming down, and that does augur well for risk assets like equity. While there is continuous discussions and concerns about the possible US interest rate cuts or not, by and large, FIIs and global investors are veering towards the view that second half of the current financial year will see some interest rate cuts. Whether it's going to be a couple of cuts or less or more is being debated. But by and large, they are talking about 2 cuts in the second half of the fiscal. And that is kind of has a stabilizing effect on the FII sentiments. This is making them positive on global markets. As far as Indian markets specifically are concerned, while we had been seeing FII selling and FII reluctance to participate prior to yesterday, there were significant domestic buying which was being witnessed. Of course, things did change yesterday when FIIs did massive amount of short covering, and that gave the market a leg up. We expect the market to remain buoyant in the run-up to the election results on 4th June. There will be volatility. Of course, it's bound to happen in a scenario where such a large general election conducted over such a long period of time is coming to a closure and the results are expected. There will be some volatility. However, the way the market expectations are, they expect stability. They expect continuation of the current policies of the government. And under the circumstances, market is remaining buoyant. Every dip is an opportunity for buying, and that has been proved time and again, including earlier this week when there was a dip. It did prove to be an opportunity for buyers. As far as specific sectors and companies are concerned, we maintain our bullish stand on infrastructure, construction, and related sectors. We believe that focus of the current government on infrastructure development and rapid construction of roads, ports, and other infrastructure-related projects, housing for all these will feed into demand for services of infrastructure companies, housing companies, building materials, and related products and services. Under the circumstances, we continue to maintain our positive, bullish view on companies like Larsen & Toubro, NCC, and the likes. We also like cement companies. Ultratech continues to remain our favorite, even on the back of good performance in Q4. We also like some of the building material companies, including plywood companies, sanitary ware companies. These are definitely worth looking at. One other pocket which we would like investors to look at is FMCG. With the expectation of good monsoon being talked about by IMD and other private meteorological experts, we do definitely see FMCG picking up, rural demand picking up, and that should give a leg up to FMCG companies like HUL, Dabur, and the others. Looking forward to a great few weeks ahead. Thank you.